Hello traders and welcome to another video review. Today is Wednesday, April 10th, 2024. Let's find out what is going on the economic calendar today. I have only the medium and most important data on my screen, so you can see that one of the most important one was the Reserve Bank of New Zealand interest rate decision, and the bank decided to leave the interest rate at the level of 5.50%, just as expected. So we will definitely take a look at the New Zealand dollar later on. And the other data is from China. China new loans data are scheduled for release at 10 o'clock. Then almost nothing is going on during the European session, and we go straight on to the New York session. Core CPI and CPI data are scheduled for release at 2:30. The market participants expect the core CPI to decrease to 0.3% and the CPI to decrease to 0.3% as well. The yearly CPI should increase from 3.2% to 3.4%. At the same time, we got the building permits data from the Canada scheduled for release, and 15 minutes later, speech from the FOMC member Bowman. Bank of Canada interest rate decision is scheduled for release at 3:45, together with the rate statement and monetary policy report. This time, the Bank of Canada is expected to leave the interest rate at the same level of 5%. Bank of Canada press conference after the interest rate decision is scheduled for release at 4:30. At the same time, we got the crude oil inventories data release, together with the Cushing crude oil inventories. Then we got the 10-year note auction, federal budget balance at 8 o'clock, together with the FOMC meeting minutes from the last meeting. So Wednesday, very busy day, 2 interest rate decisions. So let's take a look at some charts. Now we are going to start with the New Zealand dollar, then US dollar, of course, because of the core CPI data, and then we are going to take a look at the Canadian dollar. So we will start with the New Zealand dollar. New Zealand dollar, let's switch to the 4-hour chart to see what is going on here. The first thing is new local high was made at the level of 6,072 pips. We are on the way towards the next technical resistance located at 6,101. Possibly this level here is the main level that is preventing the bulls from the rally. 6,064, however, it was violated. So very interesting situation here with the New Zealand dollar. This is the ABC free wave up movement. So what we are going to do is we are going to take a look at on the Fibonacci tools to see whether this extension to the upside is maybe some kind of a geometrical. Unfortunately not. The next target for the bulls from the Fibonacci point of view is 6,088 pips, which is 1-to-1 level. So this is the level here, and let me just show you guys what do I mean by this movements to the upside. So we are looking right now on this kind of movement. This is the low, this is the wave A, this is the wave B. We are looking for the wave C to go towards the level here. So then we will have the perfect harmony, perfect geometrical harmony, 1-to-1. Length of the wave A measured from the bottom of the wave B is 100% of the length of the wave C. So that will be the situation on the New Zealand dollar. Of course, we got some technical supports. Target projections are on chart. Top of the wave A is the obvious choice here. So this is the support at 6041. Please notice that the 50 periods moving average is crossing from the bottom the 100 periods moving average. This looks very, very bullish. However, the momentum just hit the extremely overbought conditions, so we might see some kind of a consolidation or a pullback even towards the 6041, the top of the wave A, before we will resume the uptrend towards one of the first level, geometrical level, and then maybe even the technical resistance. Let me just make it red so we know what is going on here. There you go. So black and the red line are two lines, two levels that will act as the target for the bulls. So New Zealand dollar, let's switch to the Canadian dollar. Just ahead of the interest rate decision, the Canadian dollar is doing nothing. It is oscillating up and down from extremely overbought conditions towards the extremely oversold conditions. Nothing really major is going on here. We got a very, very strong presence of the supply zone. The market doesn't want to see the prices to go higher above one more level, guys. One more level here. The prices to go higher than 1.3650, I think. What's the high here? 1.3646. There you go. So we got this very nice zone here. As you can see, it worked. Even that old one worked here perfectly, and that's one big supply zone. It starts at 1.3576, it ends at 1.3626, roughly around 50 pips of the supply zone. Red lines here, red horizontal lines, bearish engulfing pattern after the breakout, and then confirmation to the downside towards the moving averages 50 and 100. Now we are looking for this market to move even lower. So the local horizontal lines and the technical support are 1.3477, 1.3455, and one more. Let me just place one more line here. This one seems to be a little bit more often. There you go. This one is 1.3419 and 1.3440. So those are the levels here which will act as the technical support. Eventually we might even have some trend line if we manage to connect this and this. There you go. So maybe if we do the extremes, we can have something like that. And this trend line might be very, very interesting as well. Any breakout below this trend line might set the outlook to more bearish. If the Bank of Canada leaves the interest rate at the same level, then deterioration will go towards the technical support. If there is a hike, the US dollar to the Canadian dollar might spike higher. So that's the US dollar to the Canadian dollar. Let's take a look at the euro dollar, of course, for our chart. Again, we got the breakout above the short-term trend line. If we switch this trend line a little bit higher, you can see that it was rejected, bearish engulfing pattern. So we can even take this bearish engulfing and copy it to give it here. So it all depends how do you place your lines. Okay, if you place your lines with this high, then of course it's very nice bearish engulfing here. If you place your line with this high, which is basically the newest data, you can see that and you connect the extremes, you can see that the bearish engulfing is exactly when the market reverses. Don't be afraid to play with your trend lines. Someone is using this one, someone is using the other one. It's apparently a very good idea to make them more dynamic, right? So what is going on here? Bearish engulfing means that the market is under the bearish pressure. Let me just apply one more rectangle here to the supply zone. So we know that this supply zone is a good one as well. So this is the red supply zone, and this is the red rectangle. So it looks like this, and it started with basically with this movement here. So the Harami is here, and the supply zone is still active. We had one more little bit higher, but don't worry about it right now. Supply zone located, identified, and the demand zone is of course the same one that we used to have. So no change here on the euro dollar whatsoever. We got some data for the oil, so let's take a look at the oil as well. And remember, yesterday we spoke about the oil going to cover this gap here, and it looks like we got some sort of the reversal, some sort of the pullback so far, but this gap is still active. This gap should be a magnet for the price, and we might see some sort of the action towards this this gap, as long as the market stays above the technical support at 84.64 and the upper trend line, of course, right? Nevertheless, the current market conditions are extremely overbought. We might see some sort of the pullback, like we are seeing it yesterday, for example. We got some kind of an inside bar, so the volatility was lower, but the news release might be a trigger for this market to move a little bit, let's say higher, to move a little bit more dynamically. So please stay with this market, keep an eye on this. There is still a chance to cover this gap that is located at 88.26, the lower level, and 89.72, the upper level for the gap. So overall, the price of the oil is increasing, and now it has a chance to cover the gap, despite the fact that we are coming off the extremely overbought market conditions on a daily time frame chart. This is daily, guys, so it's even much more important than the 4-hour or intraday chart. So it's all looking good for the crude oil. Upside is expected. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.